Why are U.S. taxes being withheld from my pay? Hi, I'm James Baker, and today I want to address a topic that I've been getting asked a lot over the last couple of weeks because I have a lot of clients from outside the U.S. and they're having taxes withheld from their payments, whether they are contractors, day traders, or they make music, or they're doing some kind of social media, or they're influencers. There's more and more companies in the U.S. that are starting to withhold taxes, and I want to address some of the most common instances where this is happening. And stay to the end because they're all different, but they're all kind of applicable to the same people. And it's really important that we review all of these because taxes are being withheld from a lot of payments. And once they're withheld, it can be really annoying to get them back. And I'm also going to go over at the end a couple of different ideas of how you can avoid having these withholdings done at all. So, first, taxes are being held from royalty payments. And there's a concept that I want to share with you right here. There's a concept I want to share with you guys about FDAP income. So FDAP income, fixed determinable annual or periodic income, is all income except for gains derived from blah, blah, blah. So it comes down to tax at a 30% or lower treaty rate applies to these types of incomes. And the most common are dividends, interest, OID, pension, alimony, real property income like rental income. And there's many different things that this could apply to. The most common are going to be dividends from brokerage accounts, royalties from selling books on Amazon or from your content that you're putting on YouTube or potentially other platforms, and for your music. Royalties is also covering music. And because of how it works with different distributors, I've seen in Spotify, some distributors used to not have withholdings, but now they're starting to withhold. YouTube's the best because they only withhold based on your US audience. And Amazon, I believe, also only withholds in your US audience, but it's basically on the books because you're uploading the book and they're fulfilling it and printing and selling the book. So they're basically considering that a royalty as well. And unless you give them a W-8 BEN with a treaty position, they are going to withhold 30% of taxes. YouTube is actually one instance where they are withholding 26% for some reason. I haven't really determined why, but that's what they're doing. And it kind of stinks because you're getting, instead of getting $1,000, you're getting $700. And I want to address really quick the compensation for personal services because that's a huge issue of confusion. It's a huge area of confusion here. And if you want to see this, you can just Google search this, and it's on the IRS website. It'll come up first. But the compensation for personal services is a huge area of confusion because it looks like it's all personal services, and it's very confusing both in the tax code and the IRS manuals and the procedures and everything that I've read because it's not specific enough. And I've come to determine and to interpret it to be compensation for personal services performed inside the United States. Hey, I hope you're liking the video. If you got value from this video, I want to invite you to subscribe to the channel. It really helps. And I see that 90% of the people watching the channel are not subscribed. Also, if you have specific questions, comment below and I'll make separate videos about it. I'm happy to do that. Thanks for subscribing, and I'll see you with the next one. So it's clearly listed that if you're doing services in the US, that you are subject to tax. And if I'm paying a contractor who's a non-US person, but they come to the US and I pay them for work done here, unless they have a treaty position that they can show to me and give to me on a W-8, I should withhold taxes on that payment. And it's really, it's unfortunate because it's interpreted improperly in different circumstances. I have a video that I reference all the time from a man from Colombia who was getting paid from Nike and from Adidas for design work, all performed in Colombia. One of the companies was withholding 30% and the other one was paying him the whole amount. The laws are applied inconsistently across the US because the guidance is unclear. And even in this situation, it doesn't apply to everything. It only applies to services performed inside the United States, yet it's not specifically stated in that manner. However, you have to think about it both from a practical standpoint and also from a logistical standpoint. If someone's doing work outside of the US and they're not doing anything in the US, just because they're getting paid from a US person, based on the interpretation of the laws from their perspective, if they have no US trade or business, they are not required to pay taxes in the US. So why would a US company who's paying them be required to withhold taxes on the same payment? It would be inconsistent to apply the laws that way. So that's my biggest argument for other people who say, no, it's all subject to withholding. if you're getting paid from a U.S. company, you have to pay tax on that or have tax withheld. When I think it's very clear that if you're outside the country and you're only having U.S. clients, you don't have to. You're not subject to U.S. income taxes. And I've had clients pay taxes, and then I write a letter to the U.S. and get the money back. The IRS doesn't like to send checks back, so I've gotten that money back for clients, so I know it works that way. And that's why I'm saying and I'm supporting that taxes should not be withheld if you're not doing the work inside the United States. It's just you have to look at both sides and how the law is applied. It's really tricky. Now, to jump back to the section of the dividends and the interest and the pensions, annuities, real property income, and royalties, those are all harder to get around, especially dividends. So if you're investing in a brokerage account and you have dividend income and you've told them you're a foreign person, they're going to withhold the applicable tax rate. You wouldn't need to file a personal tax return if they withhold these taxes because that's the tax you do. It's basically it. Your taxes are withheld and you're in the clear and you can move on. But if you have, for example, royalties, and what I've done this successfully as well. If you have royalties and they withhold the 30%, we could take a position that that's effectively connected with U.S. trade or business. And the reason we would do that is to get a lower tax rate. So if you're an individual who had 30% withheld, but you made $100,000, your true tax rate is going to be more around 15 to 20%. So you would be able to get that extra, $10,000 back because it's a difference in the tax rate. So there's different things you can do from that perspective where you can request refunds potentially if you have the full amount withheld, or another option is to use a U.S. corporation or a U.S. multi-member LLC that's taxed as a U.S. person to receive the payments. And since these are U.S. people, you give them a W-9 and they won't withhold the taxes. Now, this is a sneaky way to do it. And this is kind of the way that, that partnership and that U.S. corp should technically pay taxes on its profit. However, from those activities, you then pay yourself out or pay another company you have or pay another business that you have to lower the income of that entity so that there's less withholding and less taxes to pay from there. So it's effectively a way for you to include and claim your expenses associated with said activity. So that's kind of the way we can get around that potentially. And, it's a real tricky issue because, like I said, it's applied differently from different organizations in the U.S. And also depending on how you're organized, depending on what you're doing and how you're operating, there's potential to reduce, get refunded, or eliminate these withholding taxes. But what's really important is that you're aware of the potential and how important it is to complete the right WABEN or W-9 form and how that affects your withholding. And then also what options you have after that's done. If you have this issue and you're struggling with this issue and you're in these industries where you're trading and you're getting dividend income, you're not subject to tax on capital gains. So maybe invest in mutual funds or sell before the dividends come. That way you can avoid the withholding and still take a benefit on the stock gains. If you're doing all dividend stocks, then sell them and buy them back before they issue the dividends. So you won't pay taxes on the capital gains and the stock price will be adjusted for the dividend payments. So there's, it's a lot of work in that instance, but it's something you can do. If you are doing royalty payments, it's very tricky, but you can potentially have U.S. entities. You can potentially use tax treaties. If you want to go treaty shopping, you can open a company in a treaty country, depending on what you're doing, and play around with that a little bit. One of the options that's not as flexible is the real property income, like rents. If you are, for example, if my landlord's a non-U.S. person, I'm technically required to withhold 30% tax on that person, unless they give me a W-8 ECI, and that's them saying that it's effectively connected income, and they're not subject to, and they're subject to tax on that income. And I hate to jump around so much, but that's also something I've been seeing in a difference between Amazon and Walmart. When you sell on Walmart, they'll request a W-8 ECI from a foreign-owned LLC, where Amazon will let you do a W-8 BEN. So in Walmart, you're having to certify that you have a U.S. business to exonerate Walmart from withholding taxes, whereas Amazon doesn't make you submit that form, but they still don't make you withhold taxes. So it's different, and it's just what they're requiring at different places. So I'm going to encourage you to subscribe to this channel, comment below if you have any questions or if you've had these issues before. Share your experience so that we can learn from it, because like I said, different companies treat it differently, and there's always different options that apply to different people. And I hate to be so vague, but the truth is all of this stuff is extremely nuanced. And if you like this kind of content, you want to learn more about keeping more of your money, I encourage you again to subscribe to the channel and stay in touch for other videos that are coming out just like this. And we're going to be talking more about these topics. So, you know, there are options, but you have to look. And the first thing is to do that right. So thanks for being here. Thanks.